All right, guys, welcome on. Let me just get this going. Welcome, guys, as you're coming in. All right. Sorry, guys, I have another screen open. I was just trying to sort something out there. Give me a second. Hope it's not going to block the way or anything, but yeah, so let's get started then. Without wasting time, let me go straight over to the dollar index schematic and let's take a look at what the dollar index has done. Now, what I'm going to do is I'm going to save the dollar index on 2 time frames or open it on 2 time frames so we can have a comparative look at what's going on. Again, I just want to say I appreciate you guys, all the love and support in the comments as the channel is growing. All right. One day this channel will be at least 147 subscribers one day. You know, whilst we're building now, this will be our time to kind of take a look at what I can do to build. Now, I haven't been doing the sessions to do with the game plan for the week. I'm going to continue this Friday, okay? Starting off now with some more stuff. I've been busy, quite, numerous things have happened within my company, so I've been working on that, and I've been really busy. So I haven't had the chance to kind of do the things that I want to do, but we crack on anyway. So let's look at the schematic of the dollar index. Now, yesterday, remember I told you guys that we wanted to see how price was going to behave at this low of last week. And this massive candle you see here is the NFP news. Now, yesterday we had an open up here with a liquidity gap. It was quickly filled out. Price came back up one more time. We've had the strong H4 body closes. We've had about 4. I'll say 3 if we ignore this tiny one, which is really insignificant. But let's just say these 4 H4 candles, I think this one alone has closed very strongly beneath the previous weekly low from the H4 perspective. And as a result, scenario 1 has played out, which means that we did have that heavy bearishness. Now, scenario 2 was still on the table, but now the scenario 2 can't happen the same way that we had it in the, looking at it, or what we had when we were looking at it. Now, because we have CPI news tomorrow, which is an important US figure, it's good for us to see how price is going to line up with time, which means technical analysis will be our go-to right now to have a look at. Now, looking at the price action here, and this is why we need a higher time frame. I just want to kind of fill you in on where I am now. With the dollar index, right? There's this order block here that I'm waiting for price to get into for us to have another rally for a long, which I believe is coming pretty soon. Now, at the moment, where price is hanging around on, and we've had this kind of return back or push back away, is in this candle here today, the price is closed beneath the low of the previous week. Now, if this situation does happen and the price stays like this today, we could still have a long. Now, of course, this low will create inefficiency at this demand order block because we're supposed to return like this into the order block for us to grab the liquidity in there and start to make a move. Okay, but because price hasn't done that and it's chosen to come very close to the low but not enter it, it makes me think that we are going to have what I call like a semi-reversal. Now, because this is the low of the previous month, it is a significant low. And in terms of price contextuality, as I call it, looking at this from this time frame, the price taking the low of the previous month is as a reversal signature is a stronger signature than the price taking the high or low of the previous week. Okay. Now with this here, this movement here is the induction of a previous weekly high, not by too many pips. We only needed about 1 pip to go above the high, or 2 pips maybe at max, before price decided to make its way here. Now, with what the price has done at the lows, we've had quite a strong induction. So this is a level 2 or level 3 induction, in my opinion. So the intention for price to come to these lows is very strong. It's just it hasn't come to this order block here. Now, I have a theory for that. Now, my theory is that probably what we may see with the CPI news. Now, if you remember my comment yesterday, what I was saying is that in order for there to be a, and I think I'm going to actually record this session. In order for there to be a scenario that can play out in this manner, which is in the sense that since the price has taken the low, it's created an unfulfilled deficiency of demand at this order block right here, which is the key I'm looking for another long. Providing that price closes the way that it is with this strong wick here, strong induction, and the body stays above this low, then we may see the price actually give us a long, a semi-long, as I call it, before pushing short again. Now, again, as I was about to make reference to, and I wanted to say it for the recording's sake too, as scenario one has played out pretty well, with this scenario number two situation, between this high right here to that low, we do have a gap in liquidity price, and as in the price was only delivering sell prices. There's no other side to this. There's no buy prices being offered here at all. So as some will call it a fair value gap, this is what we call in the academy a validation point. Now, as a result of this movement here, my thing is let me just put this H4 order block as it is right here. My thing is that looking at the price action from this range or this standpoint right here, in order for the price to fill a liquidity gap of any sort of measure, then what we'll need to do is that we'll need the price to have, we need some sort of US news specifically, since we're dealing with the dollar index, that will cause the price to actually rally up and fill or close out a liquidity void. All right. Now, the only thing that can close out a liquidity void again would be high impact news. Medium impact is really the highly unlikely the price can close out a H4 level of liquidity void, but something like the CPI news can do so. Now, the CPI news is tomorrow. We also have the Canadian dollar interest rate decision at 3 o'clock, which does have some indirect impact on US dollar markets and other pairs, to be fair. Volatility does enter into every market, to be fair, or every pair. But nonetheless, anyway, when we look at the price action of what we have right here, there's a second scenario that can play out. Now, on the H4, this low right here is the newfound unfulfilled deficiency of the demand order block, right? The price is very purposeful not to enter into this order block here, because the moment it does, it will trigger a long. And then in terms of the time and price theory that I talk about or briefly touch on, in terms of time and price right now, we're not at the stage where the dollar is ready to actually initiate that long. For me, I personally think the price will initiate, or the initiation of the long will most likely happen closer to when we get maybe the interest rate decision. So in the meantime, what can happen? Well, if the CPI news is what I think it may be, we may have a temporal long, which will be used to fill out. First of all, in terms of this scenario, let's look at our two parameters here. The first one will be to fill the liquidity void, right? The second one would be to give us a order block reoptimization. So this reoptimization of the order block that we are looking at here, this reoptimization here would be to fill out the other side. Now, as you can see here, when the price broke beneath this low, we have no returns here. So we do have a liquidity gap here. So if price came back here with the CPI news, then we can temporarily have this bullish order flow here that can push the price to fill out this inefficiency here. Once that does happen, my next point of call would be to see the price actually push back down one more time. And this time, it will be to rally beneath here to actually take this low and fill the unfulfilled deficiency that was left behind. And then from that point, that's where I'll start to look for longs, and we'll start to look for our targets. Now, we know we have a liquidity gap at the 103, around this range here where this supply order block is, around the 103,655 region. Now, if you want to know where that liquidity gap is, I'm talking about, it was created on a Thursday market open. It's never been filled, and it's just been left behind in secret, which I know that the market will come there, and it will be like a hidden target when the price gets there that nobody realizes, why the price just stopped there? Well, you'll see pretty soon. So let me get the gap. So here it is. It's actually a little bit higher. It's at 103,675. And the end of the gap is at 103,705, right? So if I leave those two lines here, come back to the H4, we have a liquidity gap, which is not very visible not visible at all in the H4, but on the M15, it is quite a significant gap because it's a gap that was created at the beginning of the day. So the end of the day, price was at 705. It gapped down to 675, 103,675. Immediately at market open, we had an amazing rally down, but it never actually filled that gap out. So I know that one of the major targets that the price will get to would be here. All right. Now, again, unfulfilled efficiency is something that helps me not only just to know, okay, I need to look for a trade for a specific reason, but it also gives me a good guideline of time. And now looking at the news, and if we look at the rap sheet of the news this week, let me grab the rap sheet here. Let me go over and post this out. So if we have a look at the news here for Wednesday, Wednesday is really loaded with a lot of US dollar news, like extreme amounts of US dollar news. So starting off already from 1:30, we have, of course, the CPI news. We have CPI month on month. We have CPI index year on year. We have a CPI index excluding food and energy for these two here. And these are all expected to be bearish figures. Now, in a situation where inflation is the major macro that the world is kind of following underneath and every other scenario falls within that, if the dollar actually has, and this is not really good, if the consumer price index is actually going up in value, it means, like, if, for example, we have a consensus of 5, but it comes out to be, let's say, 5.2 or 5.5, something like that. Now, for us as consumers, there's actually not a good thing, because it means that the average cost of goods and services has increased. Okay, if you're a US economy or US citizen, all right, and you're dealing with the US economy. But for business, it means that they're earning, for the same goods and services, they're earning slightly more nominally in dollars. So let's say maybe biscuits cost £1.5. I'm speaking in terms of UK prices. In the US, it would be $1.05 or $1.05. And the CPI increases by, let's say, 0.5%. So that means that the base cost average of most things would have increased by that. So now the same cookies you buy for, and this is like an average, some things increase more than others. You know, I mean, across the world, in the country you're watching this from, or you're listening to this recording from, you know, maybe things that cost even, you know, in the value section of a supermarket may have cost 40p before, now cost 67p, which of course 40p to 67p or 47 cents, 40 cents to 67 cents may not seem like a lot in terms of physical value, but in terms of percentage value, we're talking about over a 50% increase in the cost of whatever item you have. And there are many items like that which have even doubled or tripled in their cost. Okay. So if that is the case and it actually increases, then this is good for people who are the producers. Now, producers actually have their own price index for inflation, and it's actually on Thursday that that news will be coming out at 1:30 here. So when we come back up here, we can see that the cost for consumers is, if it does increase, I mean, even across the stock market, it would mean that nominally people will be earning more gains on their stocks in nominal value, just slightly more. All right. So this news right here tomorrow will definitely be a very important feature of the day and will definitely cause the price to get into the direction it needs to. Now, the key thing is that when it comes to price action and technical analysis, before the news comes out, money moves before the news moves. By the time the news comes out, you're too late. If you think that at 1:30, that's when you're going to know what to do, you're way too late. Usually days before or a day before at minimum, the market is already aligning itself in positions in some form or some way, ready for the next day. So if we go back over to this area here, and let's look at what we have. Right now, we have a reaction. Of course, in this case, it will be important to see how the day closes. If we have a daily close and the market actually closes on beneath the low with the body of the candle, especially if it's quite an aggressive low. So let's say the midpoint of this distance from open to close of this bearish candle closes beneath, then we should be looking for a continuation. However, if not, then we should be prepared for the price to give us a pretty good scenario for a long. Now, the other side of the story is that if this news comes out to be bearish, which means what we already have, and to explain that one more time, let's switch over. The expectation is that the previous year on year, for example, target or CPI was 4%, and the target now is 3.1%. That's a 0.9%, almost 1% decrease, which will be heavily bearish from the side of producers, but for us that would be really good because it means inflation is coming down, the cost of living basically is coming down, right? In that sense, from a year-on-year perspective, month on month, it's the previous CPI index for June, previous month, which was for the month of, if we're looking at June, then this will probably be 2 months back. But now it says June here, and we get these results in July, so there's a 2-month delay. So if we're looking at June, this is comparing basically to April. So if it's going to be 0.3%, which is an increase, then that means, month on month, the kind of faster moving inflation is actually increasing. But on the broad scale of things, inflation is coming down. Basically, that's what will be the conclusion here. All right. If we look at the month on month here, food and energy bills is slightly going down. And food and energy year on year is also going down compared to last year. So this is really the crux of everything when it comes to this inflation situation. Now, the reason why these inflation figures are so important, though, from a fundamental perspective, because as the dollar is the world reserve currency of the world, as the Federal Reserve, does what it can to manage inflation, one of the biggest things is going to be quantitative tapering. And that's in many different forms. But essentially, the idea is to reduce the supply of the dollar while simultaneously increasing the demand of the dollar, which will increase the strength. Now, if this is the case and inflation doesn't get dealt with the measures that are in place, the monetary measures and fiscal policy that's come into place, then what's actually going to happen is that they're going to have to reduce the supply of dollars. Immediately they do that, which is not the only thing they do. This will cause the strength of the dollar to go through the roof. Now, from a technical standpoint, okay, and I'm going to come back here, my target for where I'm expecting the dollar to really start to shoot through the roof, to say, would be from the price to get here. Now, the last major induction that we had was this movement right here. And if the price does break beneath this demand zone, then I will be bearish on the dollar index for the next couple of months. So it is a very key area, which is why I find it so amusing that the price came very close to the order block, but chose to move away from it again. Now, on the monthly time frame, just before I bring up this conclusion, we look at other pairs. If you look at this major uptrend right now, at the moment, the price has been dancing around equilibrium. And it looks like it's a random place it's chilling out at, if you want to put it this way, but it is in a very significant order block. And I've been through this in our game plan series. And again, I will be releasing episode 9 this week for sure. This supply order block has been here since 2007. The price has used it. Well, we've never had a body close above it until 2020. When we had the body close, price pulled back long here. And since then, we've actually come back down to this area right here. So right now, the price is at equilibrium or just beneath equilibrium. So just beneath fair market value. So more on the discount side than on the premium side, but not the most, I would say the cheapest discount. This is probably the most expensive discount price, just below equilibrium. Of course, the lower we go, the more discount we get. So this order block here has been holding up really well and is acting currently as a demand zone because of this flip here. I'm of the firm belief that the dollar is going to have one more major run before a short. And this is why I'm going to have my eyes on this area here, which is this order block. Now, the price is not in here on the daily time frame just yet. So when the price gets into here, I want to see how it's going to react. Okay. So this is why where the price is right now is a very key and important area to me. And I want to see how the price is going to behave with that. Now, on the H4, right, back again, the other situation that we can have with the CPI news tomorrow is literally the price may just decide to use the CPI news as the fuel to spike the price down into this order block and then continue to go long, okay? And start off a new wave, maybe break structure of this swing high, pull back one more time and go for a long. And if that was to happen, that scenario would look something like this. So providing that the price the body of the candle stays above the high, which will help. The price came in here first, right? If I go to the H4, this is the key swing high of this week right here, a very major structure that would need to be broken. If price was to do something of this sort with the CPI news, which is to go bearish, break structure here, and then maybe in the next week we have some sort of reversal signature that gives us this move, then over the course of maybe 2 weeks or so, then we'll start to see this rally here. This is a third scenario that can actually happen. And if it does happen in that manner, then it's no problem at all. Now, whenever we analyze, and I always start the focus with the dollar index, my focus is to make sure that we have a structure of this sort. So we have something here where the price can give us, you know, a great measure of room to move around with, basically. So this is what my idea is when it comes to the price action that we've got going on. So dollar index here, H4. All right. This is kind of what we've got going on. Now, when it comes back to our pair, now this is my main kind of setup that I have. On Hugo's Way, I told you guys that we have a liquidity gap here, which I'm still keeping this because so far, Friday's low and also the low of Friday's low and also the low of yesterday, which is here. Now, I'm going to have to move all of this to the left here by a little bit so that we can have more room. So I'm just take this over here. Put all of this stuff over here. Put the liquidity void over here. This is Friday's low right here. All right, and then right over here, we can rightfully put that this is Monday's low. We don't need this line. Not that one, this line here. So Monday's low, and let's put that here, Monday's low, yeah, is over here. I'm just gonna take that off. And today's move that we had in the market, we've seen the price come back down around about this area here, close back above the high. Currently, we've had a spike down, and then price is still within this order block. Okay, now, if the price is to go for a long and we're not able to catch it, because right now the price is above Monday and Friday's low at the moment. If the price is successfully able to continue going for a long, which it can do, then I'll be looking for another sell. I told you. Now, this is the 30-minute version of my analysis. The 15-minute version is this. All right, now I can't zoom out anymore because if I do, I know that the candles will become very unreadable. So I'm just going to put this here and leave this here. Now, yeah. Now my lines, of course, are, I need to take off one Fibonacci for you guys because I have a massive Fibonacci here on the weekly, and I'll just delete it for you so you guys can see a bit more clearly what I'm trying to say. But yeah, so this is really the setup that I have on the 15-minute. Pretty simple. This is my target for a sell, and also the same target to close the buy if I take a buy. So really, I want to see what the market is going to offer us from here, and I'll be looking for that one more sell. Now, I'm not trying to be biased with the price at all. When I come to the market, I never have a bias. I just come to the market and look at what the price is offering or what the price action is saying and just take it from there. But looking at the price action that we've got anyway, this return back here, if this liquidity void is actually true and the price is going to fill this gap, then I'll be looking for a sell, you know, as soon as the price fills the gap back up here and then going for a sell from that standpoint. That's what my target is. So, you know, with that being said, hopefully USD CAD actually does go for a long. Now, I'm not going to force it to catch force to catch a move. I mean, I know that the highs of yesterday, which are relatively equal highs right here, relative equal highs. If the market so chooses to, it may actually want to go for these highs. Now, if the price does a situation where it just goes straight, no return back, it just goes straight for the long, that's fine. But I am hoping that if the CPI news if the CPI news is the one that's going to produce the long here, that's great. If it doesn't produce the long, I'm not worried either. Okay, now I told you that with the price feed here, there was a little bit of I want to say discrepancy, but on one other price feed at this same price point, it's kind of like a weird overlapping of candles on IC markets. On my other funded account broker, the gap doesn't exist. On Hugo's Way, the gap does exist. Okay, now Hugo's Way does have a great price read, so I don't want to put it down or anything, but this is, if I had double confirmation, if, you know, IC markets had a liquidity gap, but it does have that kind of weird, I don't know if they internally try to fill the price feed out with their own price feed, maybe, I don't know, or something. But either way, what I wanted to see is what the price is going to do. So my confidence would have been, now, as a price action move, is not a bad move at all. We even have liquidity gaps here. We have a liquidity void that hasn't been filled up to this point because we have a gap here. It's got all of the features of price that you would want. It's just that my thing is, I wish I had a little bit more confirmation about this gap. Whenever I've seen that kind of weird area in IC markets, it always comes back to that point when I see a liquidity gap on another pair. So that is, I guess, another point of percentage. If you have this USD CAD chart and your chart has a gap, please drop a message in the comments section below. Let me know if you guys have that gap on your chart on whatever broker you're using. I'll be interested to know. But if there is a gap confirmation there, then that will put it into perspective more that we definitely are going to have some sort of long before a short again. And in terms of how this lines up, it will be pretty simple. It will be, if the market so chooses to leave this low alone for a bit longer, CPI news pushes us long, breaks the structure, and then comes back down for the same low. That would be really good. Now, my thing is that the market forming this low and not coming to it for a while and actually going the absolute opposite way without going to the demand zone, to me, it does make me feel like that would make sense. And I'll explain to you why. Time and price has a point that is important for when it comes to developing, and is the form of accumulation. Now, for an accumulation of orders to happen, we do need time. So one of the theories that's in my mind right now is that if the price left this low alone for a bit longer, then it will give the market time, or market participants time, to pile up orders beneath the low, or to keep on trading up the movement as the price is going long, different market participants. And that will build up a lot of pressure of stop losses and different types of orders beneath this low and around or near to where the beginning of this move is. And even, to be fair, every new swing that forms on the way up. So being intelligent, it will be very wise for the market to not necessarily fill this liquidity void as a strong delay, but just a delay enough to be able to build orders maybe that can be run. Now, the algorithm of the market, there are many algorithms that control the market, not just one. Okay, but there is clear evidence to suggest that there is price action delivery mechanisms that are designed to not put retail traders in the best position. Okay, now for that reason, I would definitely say, if the market so chooses to leave this low for a bit longer, then there's definitely some sort of accumulation going on purpose, especially if it reaches halfway or 60% in this case, or 75% of the trend, and then pulls back down. That would be a very smart move to do. Okay, so this is really my view. So for Euro USD, for example, this trade signal that I gave you guys played out pretty well. All right, this was the unfulfilled efficiency. Now, unfortunately, the price has moved so far away that I'm going to have to use the H4. So, and bring these down massively. So here's 8 here. So the unfulfilled efficiency is here. This is the H4, H1 cross section that I was speaking about. Let's just put this down to 10 and make that blue. Right, and you can see that if I drag this along, this was the H1 order block. This is the H4 version of the order block here. And you can see this gray area represents the cross section between the H1 and H4. And the price got into here the first time we had a reversal. The price took the low twice with a second spike. And then now we've already hit the first target and it's done almost 200 pips. So it was a pretty brilliant move. All right, now the targets that I gave you guys to gun for are these highs of the month, these monthly highs here at 110,933. Now the thing is though, what the market has done, as the dollar index has taken the low of a previous, and I'll put the D1 here to zoom in as well. Since the dollar index has taken the low of the previous month, we have a very exact inverse correlation situation going on with Euro USD. On Euro USD, we've had the price take the high of the previous month on the other side. Now, even though these highs are not too far, we have very strong relative equal highs. There's definitely evidence to suggest that the price would want to move up to this last 100 pip move. This is why I'm saying that if there is going to be a pullback, all right, something like Euro USD will definitely pull back to the next nearest area it could do. Maybe something down here, you know, like a daily validation point here. I think this is a bit too close to the current price, so maybe not here. But even back down there for like a pullback wouldn't be a surprise to me at all. So this is why I would say to you that when it comes to looking at the price action for the dollar index and stuff, we really want to pay attention to cross pairs on what they're doing. Okay, AUD USD, Pound USD, pretty similar stuff. Now I had this all marked out, and now I'm annoyed that I didn't actually get involved with it because it's such an amazing move, such a brilliant move it is. But that's fine anyway. Now it looks like Pound USD is working its way up to. I'm gonna delete all of this for now because you've seen the zone. Pound USD is working its way up to fill out this liquidity void. It is coming to the next area of supply right over here, which is, it looks like a small distance, but it's actually quite a far distance. And looking at the left, there's nothing to the left to stop the price filling out this liquidity void. It's literally in the middle of line. All right. The next area where there could be some sort of resistance against continuation in buying would be right here. And that is from the current price, 140 pips away. Now, saying that, of course, the market can decide that, okay, I'm going to actually continue going for a long, or I could do a short unexpectedly and then do a long. Okay, and that would be a determining factor. Now, if I see over here what we have a plethora of equal lows over here. And we also have over here a buy order aggregate situation in terms of an aggregation of buy liquidity. Here, this is clear institutional sponsorship because we have all blue candles, all red candles. This was a great re-entry to go for a long. But because we have an aggregation of liquidity here after this bullish run that came from smart or institutional money, then ideally, what I would say is we should be careful that the price doesn't actually go to this target and actually maybe drops beneath it. Maybe it fills out some sort of inefficiency on the low before going long. Because again, this movement here, when the price sold off, it took this low here. And it also took this low over here. Now, when the price took this low, let's draw the order block on the 30-minute. What's going on here? So if I draw the 30-minute order block, this is the last demand zone before the price change direction. As good as this long looks to me, and I do like it, don't get me wrong. But if I just take this low here and have a look, we did actually return to this demand order block. As sweet as the move is, as sweet as even, you know, this supply order block move is, this was a beautiful move. So watching the dollar index tomorrow and the rest of the week, I mean, the price is very far away from here, but there is a chance the price may be cheeky and decide not to go for the obvious, which is back up to the 130 and then go short. This is one scenario, okay? The other scenario is that the price may delay on wanting to run this liquidity and allow people to feel comfortable in the long before then actually rallying down for a massive short. You know, maybe in line with the time when the pound interest rate decision news comes out, and then, you know, before you have it, there you have it, we have a massive move. So these are really my setups right now, but I want to wait more to see what the market wants to do first before I take my, you know, proceed and go further. So this is my idea, guys. I recorded this one because I think this is an important one and I wanted to make sure you guys have it. All right, but I'll catch you later. I'll see you tomorrow. I'm planning to actually cover the CPI news live, so I'll probably go live at like 1:15 and just see what we've got going on before the news actually happens. All right, and we'll take it from there. So I'll catch you guys later. Everybody take care. Have a great day.